Let's start over. Good morning, everyone. I'm Vince Lancy, and this is the Gold Fix Market Rundown at 7:16 a.m. Early start. We'll get into why in a minute. Uh, Key Bullion Bank rejoins the Bull Club. Citi lifts its gold forecast to 3,600 as an upside target on slowing U.S. growth and persistent inflation. Citi has sharply reversed its gold outlook, lifting its near-term forecast to 3,500 per ounce as U.S. growth stalls, inflation pressures mount, and safe haven demand accelerates. We'll go through that in a second. There's the home page. Here are the markets. 10-year yields are 420, unchanged bid, up about 2. The dollar is 99.01, up 28. The S&P 500 is 63.46. Up 4. The VIX is 1723, down 30. Gold is 33.53, down 20 on its lows after being up on the evening. Silver is 37.37, down almost 3 cents, holding very well despite. Copper 438, down 3. WTI 66.14, down 67. Natural gas 296, up 4. Bitcoin 114,700. That's a dog with fleas for me. I'll come back to that in a minute. Down 200. Ethereum 36.73, Palladium down 1 4/10%, and platinum down 1.1%. So keep that in mind. Platinum down and down again, 2 days in a row. Palladium down and down again after having strong opens. Silver up despite copper, platinum, palladium being down. Today, silver's down, but not as much as platinum, copper, and palladium. So and gold is down. So there's something specifically going on with silver. I'm not going to say it's the end of the world, but I'm going to say there's some nervousness out there. All right. Let's get to the story. There's the front page. We sent the story front and center out this morning, and the lower right-hand side to the founders macro trade idea we sent out. That's for discussion only. Citi calls for 3,500 by November. Citi has sharply reversed its gold outlook, lifting its near-term forecast to 3,500 per ounce as U.S. growth stalls, inflation pressures mount, and safe haven demand accelerates. Citi raised its 3-month gold forecast to 3,500 with a new expected range of 3,300 to 3,600, citing slowing U.S. growth, tariff-induced inflation, and rising safe haven demand. The bank's reversal follows weaker than expected July non-farm payrolls, up only 73K. I think we were expecting about 145,000. And downward revisions for June and May, triggering an 83% odds of a Fed rate cut in September. People are actually talking about an emergency cut now. The move contradicts Citi's June call. Contradicts is not the right word. Reverses Citi's June call for gold weakness on macro improvement. That report saw prices falling potentially below 3,000 by late 26. Since then, and this is why they changed their tune, labor data has deteriorated significantly, and Trump's sweeping tariffs have intensified inflation concerns looking forward. U.S. growth and tariff-related inflation concerns are set to remain elevated during the second half of 25, said Citi. The bank also flagged declining Fed credibility. We agree with that. Geopolitical risks, those are supposed to have gone away, but they really haven't. And a 33% jump in gold demand since mid-22, which we all know, but it has to be said. Central bank buying and strong investor flows continue to support price strength. We noted in March, Citi initiated renewed interest in gold miners earlier this year and now projects gold will set new all-time highs. Now, not editorializing, except to say that this is a 3-month outlook, so it's tactical. You're not sure what's going to happen after this. I think a lot of this has to do with the situation that Powell is in right now. That full analysis it is in premium. Under the premium post, gold, Citi calls for 3,500 plus in November. Related post. Yesterday, we put out a post called Unemployment Can Spiral Higher Now. No one really cares about that right now, at least not as much as we care about it. But we think you'll be coming back to it someday saying That was a good point. Or maybe you'll say that was a bad point. Who knows? There was news. Somaliland offered U.S. access to protection. Hat tip to fellow Silver Degen. Somaliland is a breakaway piece of Somalia, and they're now shopping loyalty. And UAE is one of the countries that accepted them. The U.S. is the main country that they want, and we would bring that up in context of supply chains. U.S. wants rare earths. They have rare earths. They have natural gas. They have oil. I don't know that we need the oil or natural gas, but we would like to control it and restrict who it goes to. So there's an opportunity for a country that wants to be recognized as a country, and then they would prefer that we put a base there. And I guess if we have a base there, we won't invade them. Anyway, Martin Armstrong says gold signals war. He has a computer, Socrates, he calls it, and the odds of war have reached as high as 100% for him over the past 6 weeks. And as extreme as it is, the march towards things in that way are corroborating the concepts. And he makes a compelling case, essentially calling everyone kindergartners the way they're acting right now and how it could get a lot worse. Founders, Bullion Bank blinks, raises target. We sent that out yesterday. That was a preview of the city thing. And there you have it. Later today, macro analysis, why August 15th might be key for gold and stocks. We believe as macro traders, this will be a key driver of market activity between now and the next important data point, which is due August 15th. The August 15th data point is CPI. And what can Powell do between now and August 15th, even if he wants to? Nothing. He needs that data point before he acts, whether it's in September or an emergency or what have you. And we have other things coming up too. Data on deck, as we said, it's a summer low. Today's Tuesday. PMIs are important. And they might move the market, but they have nothing to do with Powell's decision analysis. Let's go to the charts. All right, there are 3 markets I'm going to look at today. Gold, silver, starting with gold, silver. Where is it? There it is. Okay, and this is just cold chart analysis. We're not telling you a story here. All right, so gold, silver. I set a close below 90 on a monthly basis, gives us 79 as a target. We did not close below 90, and now we're moving higher. There's another channel in there that I don't have showing on this chart. That channel is also below now. So by the numbers, you should not be long. I'm talking by the numbers. You should not be long silver and short gold right now. Okay? That's what that's saying. We're at the bottom end of a range, at the bottom end of a channel, and you want to wait until the market goes below that. Now, you don't want to wait for a whole month because I work on monthly targets with this, but you do want to keep in mind it's not time to get long silver and short gold now. By the chart. Now, if you look at the board, you say, well, that doesn't really mean shit on a day like today when gold is down 20 and silver is basically unchanged. But I just want to keep that in mind. Next, gold daily. Gold daily on Sunday. I raised a trade idea that above 33.47, we should go to 33.90, and it should happen in a short time frame. And that was on this close. Yesterday, we got to 33.85. That's not a cigar. It's close, but it's not a cigar. It has to be 33.89, only because of the risk reward. I said below 33.47, the signal would be negated, or a trade idea would be negated. And frankly, my stop loss is probably going to be 33.34, only because that's my position stop loss based on VAR, right? So 33.47 is the technical level, 33.34 is my financial stop loss. So if we get below that, the bet is off. which would be sad, but that's the way it goes. That's it. So, but I do believe I have the position on, thus I believe it. Between now and August 15th, gold will have a bullish bias. And isn't it interesting how Citi changed their tune on gold right as the data came out? Just saying. Silver. No, not silver. Bitcoin. Right? On a weekly basis, I talk about measured moves here a lot, and you may have forgotten, but I had a measured move analysis from here to here. And I said from here to here, we break that, depth equals distance. And I said, as long as the market doesn't go below 100,000 on a settlement basis, it was a buy. Now, I had bought it at 100, well, it was 100,000 was my level to get out. I had bought it in here. I bought it right there, 108,000 and change. Now, I actually bought it in here the first time it went up to 108,000. Then, of course, it went down, but I didn't get stopped out. And now here we are here. Now, I could say to you, this is truth. I could say to you, this is a winner. Aren't I smart? My idea worked. No, it didn't. It didn't work because it was risking 10,000, right, from 110 to 100 to make 20,000. The idea was we're supposed to go to 130, and we're supposed to go to 130 relatively quickly, and we did not go relatively quickly. So, yes, I have profits. Okay, it's not huge. Yes, I have profits, but the money's tied up, and I can't trade something else. And because the money's tied up and I can't trade something else, I'm stuck in a trade that's making me money but is going nowhere. It's stagnant. Okay, so this is a dog shit profitable trade. There are great trades you lose money on, like this gold one might be today, and there are dog shit profitable trades. So, give you an idea what I'm thinking about here. Going to the daily. All right, there's the weekly part, and there's the rally. Yeah, that's it. Well, it's in here somewhere. But the point is, we now have a structure here in the daily, and we're below it, and we're back. Call us below it. Call us below it, and you should sell it. I think essentially the trade idea is still valid, but the tolerance for pain is 0 now. So my stop is raised to, it's firmly raised to 110,000 now. So below 110,000, I'm out, we move on. But in the meantime, it's tying up capital. And that capital could be doing something else, like, I don't know, buying a new set of golf clubs. I don't golf, but you get the idea. All right, so that's it. Those are the markets I wanted to talk about today. And I have to go out there and make sure I don't get my ass handed to me. I'm Vince. Have a great day.